So why should you get prepared now for what's coming? Well, let's talk a little bit about a thing called wisdom. You've heard of this before. Certain people that you've come in contact with have wisdom in certain areas. Well, when it comes to money, the markets, economics, and cyclical patterns, wisdom is something that is very important because wisdom can only be created through a few different things. Number one, failure. Number two, time, and sometimes lots of it. And number three, knowledge based on real life examples. So unless you have lots of time, unless you have somehow found the ability to get all the information from the past to derive at what we call wisdom, this video might be really impressive to you because it's all based on a very wise man by the name of Ray Dalio. Maybe you've heard of him, and if you haven't, maybe you should, because he might be one of the smartest minds when it comes to money and what's about to happen. Because I know that following wisdom always leads you to the source, and that's about what we are at. We are at the source of the next great financial meltdown. So that's what we're going to talk about. We're going to talk about how do you get prepared based on what Ray Dalio is teaching, what he's saying, and all the information that he has gathered through time, through failure, and through doing it. All right, everybody, welcome back. Another week, another wealth webinar. And today, we've been asked for this topic over and over again, and we are going to deliver. Some of you are going to laugh. Some of you are going to cry. Some of you aren't going to even know what to do with this information, but Abhi is going to bring it home. Here's what we're going to hit today: business acquisition and valuations. But let's just summarize some of the different things, because some of you are like, oh, that sounds boring. It's not at all. I don't care whether or not you're looking at the next property to lend money, maybe the next property to buy. Maybe you do start looking at businesses to buy. It all comes down to the simple fundamentals. We've all heard of Warren Buffett and how he comes up with the ideas to buy into companies and to buy the stocks. It's through fundamental analysis. So what Abhi's going to talk about is going to give you an overview of business acquisition and valuations, the importance of evaluation, the methods of valuation, the revenue, the EBITDA, the multiple, the interplay of revenue and EBITDA. So I know some of you don't know what this is, but folks, it's not going to be boring. It's not going to be listening to some analyst talking to you about like how this works. This is going to be freaking awesome. Abhi, welcome to the show.
Dude, guys, Naugle, thanks so much for having me. I'm so excited about this, only because there are a lot of people that you'll find on Google. If you just do a quick search, businessacquisitionguru.com or whatever, and they're coming out saying this is the way of the future. Not only am I going to prove that, but I'm actually an operator in this world, and I'm currently in the middle of acquisitions. And there are a lot of things that you'll hear that people will say that are just completely false and not true. And one of the reasons why, Chris, I love your content specifically on Instagram so much, you're like, dude, this is where you're using insurance totally wrong. And here's how to do it the right way. And I feel like I have to be, and I want to be that guy for the business acquisition space, because you might be thinking about, well, geez, what can I buy? Should I buy this? It's easier to buy something like a 60 unit or a duplex and see my money grow over time because I believe in America. But I think at the end of the day, you have to add business acquisition to your portfolio for one reason. You accelerate your wealth when you buy a business. You preserve your wealth when you buy real estate. So it's not a matter of either or, it's a matter of both. And how you do that, the art of which is what we'll talk about today.
Gosh, I love that. And folks, come on. We got over 100 of you on here. Like, he's got some good hair, huh? Like, I like to sometimes think I've been working hard on the mop. I have. I mean, it's been a long time coming of growing it. Like, and he's got it down with the really nice shirt. Like, come on, folks, give it up for Abhi on this. But this stuff is going to be really interesting. I'm going to be glued to the screen, and I'm going to be glued to the screen because I understand one thing you mentioned, Abhi, and that is YouTube. Just let me give you a quick summary, because I think this is going to kick it off. So folks, you all know that I put a lot of content out on YouTube. I spend roughly, right now, it's $23,000 a month, and we're about to increase that again because we're going to bring in another editor that's going to do it. So that's a big investment. And I understand one thing about YouTube is it's the future. I watch my daughter, 3 years old, She doesn't watch TV, folks. I remember growing up, I watched the tube, man. I watched cartoons on the tube. My daughter watches all of her stuff on YouTube, and she's way smarter than I was at 3 years old. Just saying. So if that's the future, how do we understand how to monetize the future? Well, if you look at YouTube, don't think of it as YouTube or Google. Think of it as, like, if some of you are old enough, think of it as HBO. YouTube is what HBO was. HBO did not exist without Paramount and Universal or Pixar or any of the production houses making really good flicks that we wanted to watch. And in HBO, when they got a hit, let's just take Maverick, for example, it was a hit. Every network, HBO included, wanted to air Maverick because it was a hit. And they push it out there and they help advertise. HBO was back in the day. Now, YouTube is that of what HBO used to be. And me and Abby and all the content creators, we're the Paramounts, the Universals, and all we need to do is make really good content that people want to watch. And if we can keep their eyeballs on, YouTube will pay us because then they can sell advertising. That's the summary, folks. So what you're going to hear and what Abby is doing with buying YouTube channels is freaking brilliant. I never thought about it, but I'm ready, man. Give it to us.
Dude, so there are the way that I like to think about the two distinct opportunities that we're facing today. One, everybody talks about. You probably go to Google and you think, well, you type in business acquisition. The first statistic that comes up is 10,000 baby boomers are retiring every day, 10% of which have businesses. Generally speaking, many Americans that own small business in America, blue collar Midwest, they don't have a succession plan. And therefore, that's just prime opportunity where you can go acquire their business. To give you some additional fact, there are less than 5,000 business brokers in America. And what does it take to be a business broker in America? In most states, a real estate agent's license. And most real estate agents are not business brokers, and they have no business evaluating a business because that's not what they're trained to do. But that's the reason why less than 5,000 of these business brokers are actually decent. Let's assume 10% are. That means you're telling me 500 business brokers across America have to service 1,000 business owners every day that are retiring, that are baby boomers. That's a massive opportunity for us living today in the greatest wealth transfer that we've ever seen. Ray Dalio's talked about it, Buff has talked about it, Tony Robbins has talked about it, and some of these other gurus that are out there have talked about it, but nobody still is stepping up to the plate to really freaking go and do this. The second opportunity that I'm finding is you have YouTube creators, which will hit probably really nicely for the younger audience or the younger demographic that's logged in today and listening to this. Is YouTube creators are thinking and considering one thing. They just want that awesome plaque that you get on YouTube that says you've had 1 million subscribers or you've passed a certain number of views, right? But the YouTube creators are only really paying attention to monetizing YouTube. They are not thinking about creating a freaking ecosystem around YouTube as one of the outlets to distribute their content. So a very easy business play here is to go find a YouTube niche that you like. I don't care if it's equestrian pole dance, right? Like you find a YouTube channel that works for you, drive the eyeballs, okay? So identify YouTube channel industry, identify a couple channels that you want to go purchase, get in touch with them, see if they want to sell. If they do want to sell, structure owner finance, because many of them don't know how to structure business, a business structure exit properly. You do some kind of owner finance, maybe a little cash up front, and you use that viewership, those eyeballs, to then go turn to e-com stores and say, hey, I just purchased, or I have a YouTube channel that has maybe 1 million views a year. Let's do a brand deal. And they're willing to pay for the brand deal. Fast forward that, and I'll shut up here in a second so you can ask some questions about this, and we'll jump into how I'm valuing these things and the 2 active deals I'm working on both sides of the spectrum. Then what you do is you tell these e-com channels, hey, what was your last year's revenue? Many of them might say $50,000 or $100,000. The deal you can make with them is, let's say I bring you $200,000 or $150,000 in extra revenue this year. I want 40% of that revenue plus 20% ownership in the channel because I know you wanted to be on YouTube to sell as a distribution method for your physical products. So what have you effectively done? For the price of next to nothing on a YouTube channel, you're commanding YouTube eyeballs, you're sinking your teeth into e-com stores, and now you're exposing that audience to your brand that you're building that's on TikTok, Instagram, and a blog, you freaking win.
Well, the
So
first thing I got to point out is, I'm always a fact checker. So you mentioned esquitarian pole dancing, and I thought you just pulled that out of your ass. I'm like, that doesn't exist.
I did pull it out of my ass. Does it exist?
Dude, Google it. Like, listen, we're talking about
I'm done.
YouTube, which is owned by Google. Like, it's a freaking thing. There's YouTube videos about esquitarian pole dancing. I'll just put one in the chat. I thought you were joking. And I'm like, I'm going to fact check this. Sure enough, it's a thing.
Oh my God.
It's a thing.
Dude, this is ridiculous. So let me give you an example. And then I'll open it up to some questions. And Michelle said something interesting about dentistry. I own a dental practice in St. George, Utah, so we can actually also talk about that. Good inner thigh work. That's hilarious. So I purchased an F1 channel called GP Culture. Okay, I don't know anything about F1, but here's what I did. I purchased a channel last week. This is last week. So this is like June 21st today. I bought it last week. In less than a week, I have an exclusive with the F1 writer, the script writer, an exclusive. I created an exclusive agreement for the script writer with the video editor to come work only for my channel. Come to find out, they were also working for 5 or 6 or 7 other F1 channels. The other F1 channels are pissed that I got an exclusive for these guys. Specifically, they're 2 gentlemen. Then this channel specifically, last calendar year, has had 13 million views on their channel with about 40,000 subscribers. I went to ecom and I said, who are the top ecom players that are selling F1 merch? And I struck an affiliate deal and I said, listen, if I blow your revenue numbers out of the water for 2023 into 2024, I want revenue share and I want equity in your business. All 3 of them agreed. And now I have a team in place for my channel that I will outsource to the rest of the F1 channels. And I said, hey, well, I'm just giving you your team back plus brand deals that I'm going to bring to you. Here's an extra, I want 10 to 15% of the growth of your channel plus equity in your channel for life. Everyone agreed. That was 7 days. You can be crazy creative in this opportunity in this space. And that's just YouTube. We haven't even gotten to the electrical company that I'm buying in Illinois, and that we're closing on that in 2.5 weeks. That's an SBA 7A loan. The total purchase price on that's 4 million. Adjusted EBITDA is 1.1. We're buying it for 4 million. Top line revenue year over year for the last 2 years has been about anywhere between 3.8 to 4.2. So we're buying it. Keep this in mind. We're going to bring this all full circle in a little bit. We're buying it at a 3.8x multiple on EBITDA, which is a great deal in today's world with interest rates at 10.5 that the SBA is giving you. And the guy, he's an older gentleman, he's retiring. Just like your dentist example, there are plenty of these businesses out there that are cash flowing. After debt service, I'm making about $400,000 a year. You know what I'm going to do with the 400 G's a year? Go buy more freaking YouTube channels. All right, I'm off my rant. Sorry, Chris. I feel like I'm yelling. Am I yelling? I'm yelling.
No. We got a couple of people saying this is my first time listening and I'm already lost. Folks, just so you all know, we're having a little bit of fun in the beginning, but we're going to bring it down. The whole point of what I think you can all take away from this is when you're looking at any investment opportunity, a lot of people just dive in. They literally don't do any due diligence. They heard from their Uber driver, their Lyft driver, or maybe, a show like this, and someone says, oh, you should invest in this. It's the greatest thing. It's going to the moon. And people actually do, and they don't do any due diligence. So what we wanted to do today is just take it back a step, because if this is the time where everything really should be focused on preservation of your wealth, you need to learn how to do this, because one bad mistake and your wealth could be wiped out. You put your money in these market-based, or let's just say a stock or an index fund, and you think, oh, it's going to the moon. And the next thing it doesn't. You put your money in crypto because the Uber driver said, oh, you should do this Shiba Inu thing. It's going to the moon. And then all of a sudden, how'd that work out for you? And I don't mean to hit anybody, below the belt, but like, come on, we all know, like, some of you bought that. Why did you buy that? Somebody told you to, and you did no research. You didn't even know how to pronounce it. You're like Shibu and I don't know what's this Shibu thing, like that. And then the Dogecoin, right? Oh, it's the race car. It's the dog on the NASCAR. Like, that's all you knew. You didn't even know what problem that solved. And the only problem it solved was it created a problem for you called I have a lot less money, right? So what we're going to do today, what not so much we, but Abhi is going to do is really teach you how to look at things a little differently, how to open the hood and look under the hood to see what is it I'm actually buying. They said it's a V8, but I don't know, is it? That's what I'm hoping you all get out of this. So just to bring it back full circle, we had a little bit of fun in the beginning, but now we're going to get into it and really help you. And what he was talking about was YouTube channels being a business opportunity. And that's what he's buying. And I'm blown away by that, because like, I never thought about that. Why couldn't you go out and buy cash producing, revenue producing YouTube channels, pennies on the dollar from a standpoint of like how it's valued? All of you are like, well, yeah, like I'd love to do that. Great. Wouldn't you love to learn how an expert does the due diligence to decide on which one he's buying and why he's buying it? Now, Abhi, all I'd ask is, for some of them, when we say EBITDA, they don't know what that means. So let's just dissect some of the acronyms and tell them what it is. But yeah, let's
Sure.
dive in. You guys ready for this? I know it's a little higher level, but like sometimes you got to put yourself in an uncomfortable place so that you can get comfortable and not make mistakes with your investing future. All right.
Yeah, 100%. And I believe I'm also speaking at the event August 3rd, 4th, 5th. I don't know which day yet. And I will also do a deep dive into all of these topics. So really freaking cool, and really excited to be on stage with you, man. It's going to be a lot of fun.
So what we're going to be doing is all the stuff you're going to be learning, you're going to be able to actually come meet us in person. You're going to be able to see a deep dive on this. And all you got to do is get yourself a ticket to this event. We're doing the 3rd, 4th, and 5th. The 3rd is only for VIP, but we do have some VIP tickets, and we'll make a special offer. Stephen, we can give them a good offer today, right? Maybe like half off their tickets just for being here. Yeah, so we're going to make a really good offer for you.
Yeah, absolutely. I'll put it in the chat box. Come see us.
All right, so
Cool.
let's get some of you out to meet us in person. All right, Abhi, I've taken enough time. Let's dive into this.
You're good.
Let's teach people how to look under the hood and realize that the 8-cylinder they thought they were buying is actually a 3-cylinder barely running.
So that happens every single day across America, whether you are interfacing and connecting with a business owner himself or herself and direct to the seller as a result of a marketing campaign or LinkedIn outreach, or using Apollo.io to find your leads, whether it's a business broker or a owner of a business you're reaching directly, somebody's lying to you. It's just like a real estate deal. You got to figure out what's happening and what's not happening. Where is the truth, and what level of risk are you comfortable with? So every day across America, there are people that buy businesses improperly. Now let me dive into what I mean by improperly. What are they looking at versus not looking at? Many people, like when you're evaluating a stock, I'll make a very easy comparison. When you're evaluating a stock, what are you going to do? You're going to go to Google or finance.yahoo.com or your trading platform, trading account, and type in the stock ticker symbol. You might pretend like you know what price to earnings ratio is. And if it's going up and to the right, if the general 5-year graph goes up and to the right, you're like, of course, this is a good stock. But how many of you actually visit alpharesearch.io and look at the 8K SEC filings for every company that you're investing in? My guess is not many of you. And when you look at these reports, just like when you look at a profit and loss statement for a business, and you look at tax returns for the business, many of you will say, I don't know, it seems okay. One of the first things you want to look at, whether you're buying a YouTube channel or business, is tax returns for the last 3 years. The tax returns don't lie. The other reason you want to look at tax returns is that is what the bank will judge the business on in order to give you a loan. All SBA lenders, all they care about is tax returns, because you and I both know that we can go to Fiverr and fabricate bank statements and a P&L and make something look super pretty as if it came out of QuickBooks. So P&L means profit and loss statement. I need a balance sheet, and I also need a cash flow statement. These financial statements, and if you're not familiar with them, that's totally fine. Again, come August, we can talk about that, and I'll be doing a deep dive into the 2 deals I'm working on. But those are the 3 financial statements you want to pay attention to and look at for a traditional business that you're buying. If you're looking at YouTube, really YouTube is a little bit of a different animal. You care about revenue, you care about the expenses, and then of course you care about your net profit number at the end of the day or at the end of the year. YouTube is a little simpler. But the questions you ask when looking at revenue and expenses, that's what makes or breaks it. For example, I'll pull a YouTube example. Let's say the revenue for a channel was $65,000 and expenses were $50,000. That means the net profit at the end of the year was $15,000. But you start digging into your expenses and you think, well, geez, why does this person have 8 thumbnail artists? Why does this person have 4 video editors on staff? Why does this person have 3 script writers when you generally need 1 of each? That's not a bad thing. That becomes an opportunity for you to make those expenses more efficient to drive then more profit to the bottom line. So when we talk about revenue, EBITDA, and the multiple, I'm talking about the revenue that the business earns. EBITDA it's a term used by GAAP, generally acceptable accounting principles, and it stands for earnings before interest, taxes, depreciation, and amortization. Okay, EBITDA. It's kind of a weird, I don't know. You come up, let the Wall Street banking investment types like come up with weird names and acronyms for stupid shit like this. But essentially, it's earnings. Okay, I want to know what my earnings is, EBITDA, and then the multiple. The multiple is the factor by which a business will trade. What I mean by trading is, if I'm a plumbing business, which is a really hot business for private equity in America today, if I'm a plumbing business and my EBITDA, my earnings at the end of every year is $100,000, the industry multiple that I can expect to sell my business for in that niche may be between 3x and 5x of earnings. So let's do the math. If I've got $100,000 in earnings for the year after I'm done paying my expenses, and I'm applying a 4x multiple to my earnings number, I'm selling my business for $400,000. In the electrical company that we're buying, the EBITDA was $1.1 million a year after we adjusted some of the numbers. I'm paying a 3.85x multiple on that EBITDA for roughly a $4.1 million purchase price. So that's the difference between revenue, EBITDA, and the multiple. These are the 3 levers in any business. I don't care if you have a hair salon. I don't care if you are a real estate wholesaler. I don't care if you are a property manager or you run a plumbing company. These are the 3 numbers. Some may say you want to take a look at SDE, seller discretionary earnings, which is a version of EBITDA, but earnings nonetheless. So let me stop there and pause for questions. I know that's high level with a couple examples, drilled down into some nitty gritty, but this is great vocabulary to get started with as you go out and start analyzing businesses or anything you want to invest in.
Perfect. So who has some questions regarding this? And how many of you have ever actually looked into the investments that you're making, from a deeper level? I mean, have any of you actually looked at the financials? If you did, would you know what you're looking at? How many of you have ever wanted to learn this stuff? So like Drew saying he has, Laura has, or no, Laura's joining us next time because this was just maybe a bit advanced, which I completely understand. We got to mix things up. We do this every week. How many trainings do we do a week, Stephen? 5 or sometimes 6 a week. So sometimes we just need to bring that higher level stuff in because this is going to hit home for some people. So Oscar said, where does the multiple number come from?
The multiple number, generally, it comes from your ass. Okay, that's legit. Any business broker will say, well, do you know how in real estate you have comps? Generally, those comps establish value for a property.
That's a great analogy.
In the same way, you have businesses that are sold within a couple of years of one another, and that's where the multiple will come from. But you tell me this, why is it that a tech company that's doing really well, making, say, $2 million a year, will get a 15x multiple on revenue, whereas another tech company will get, maybe in the same niche, will get a 5x on revenue? It's the story that's sold to the people that are buying it. So ultimately, it's a blend between your ass and industry kind of standard, maybe-ish.
Mary had a good question. She said, how do you find them?
How do you find the multiple, or how do you find the businesses?
Well, probably the businesses first, and then Mary, if you want to know how to find the multiples, let us know. But I think you were referring to how do you find the businesses? And that would be the thing I'd ask. Like YouTube, I mean, you could go on and scroll for days, YouTube channels, but how do you identify ones you want to buy or businesses you want to buy? Is there brokers bringing you opportunities or like, yeah, that's a good question.
Great question. So I'll start with the traditional broker, and then or the traditional business acquisition, like a plumbing company, and then I'll move to YouTube, and then just a quick major value add for those that want to learn more about EBITDA. The multiples, excuse me, they're two different places I would go. First, I would go to IBIS World. IB is in boy, isworld.com. This is a great place to learn about different industries, different NACE codes, and the multiples at which they're trading. The problem is IBIS World generally is good for businesses that are valued around $90 million on up. So then where do you go for small business America? Check out Vertical IQ. That's been my secret sauce for the last 7 years in acquiring businesses. Okay, Vertical IQ. Insane, just go do that. And it's not very expensive. IBIS World will run you, I think, $5,000 to $6,000, $7,000 a year. A Vertical IQ is like on a per report, couple $100. Insane. Like I'm in the process of buying also a couple of HVAC businesses, and Vertical IQ gave me all the information and questions I needed to ask, so I sound like a pro. I mean, look at me. Do I look like I can do hard labor? Like I'm as pretty as Chris, right? But like he looks like he can lift a sledgehammer. I go to the gym and I'll pick up like a 5-pound dumbbell to do bicep day, just because one, it's like not 25 pounds, and two, I get the satisfaction of going to the gym, and three, I'm being very, very efficient with my time. So, I'm out of there. I'm just too pretty. Okay. Nonetheless, two different things. Where do I go to find businesses? The traditional businesses I'll go to, I will find on a LinkedIn campaign using apollo.io. And I have an entire team of people offshore that create my content. Just like Chris, I think he's got a combination, I think onshore, offshore people. I'm not as badass as Chris is yet. And so I've got primarily offshore, I've got a team of 7 to 8 that primarily do my content. And that's what also drives a lot of deal flow. That's where I find the business owners that want to sell and also business brokers to interface with. Those are the two big things. And if I'm really interested, I will fly to the business owner, schedule a meeting, and off we go. If I'm looking for YouTube channels, I'll pick a niche. I'll pick a niche like F1, or I'll pick a niche like anime. Okay, like anime is another really big one, or I don't know, soccer, football, or whatever. And I'll start looking at who are the creators that are popping up every now and then. And I use a tool called TubeBuddy, okay, TUBE Buddy, and it gives me analysis on that channel. And I can tell within a matter of 30 or 45 seconds, and I'll show you this in August, of whether or not a channel is actually dying. And if a channel is dying, I can start a conversation with the owner of that channel by clicking on the About tab on the YouTube channel and email the owner and say, hey, my name's Avi, this is what I'm doing, would love to connect. And that usually spins off some pretty cool conversation. There's no secret sauce. That's exactly how I'm doing it. I can show you my funnels. I can share a screen right now and show you. But like, that's what I'm doing to go find these businesses.
That one's a really cool. I'm just looking at that one. TubeBuddy, that one's really cool.
Yep, TubeBuddy. Yeah, that's it. Like that is the secret sauce.
All right. Anyone else have any questions before we move on? Oh, actually, Gentry said he was asking also how you find businesses, which we already answered. But he says, who can help you look at the numbers in the deals? Let's say it's somebody that's brand new, that's kind of like, this is interesting. I got a little extra capital in my self-directed IRA. I'd like to invest in some of these things. Like, is there someone that, like a third party, someone could hire to then review the deal and say yay or nay, or does this fit my needs and goals of what I'm trying to do?
Yeah. So what you're looking for is a slew of accountants that have had experience in mergers and acquisitions and private equity at a top 4 accounting firm, period. Okay. That's it. Like that period is period. Like nobody else should be on your advisory team aside from them. If you have somebody that you find on LinkedIn that's like, oh, I'll help you buy your business. No, these guys are dumb and they don't know what they're talking about. They just want a retainer and they will suck your money dry. Like, you don't want these people on your team. You want somebody that's been there, that's done that. It's kind of like a fractional CFO that might be willing to work for equity. But if you have a self-directed Roth, for example, and you've got $100,000 in it, or 200 or 50 or 25, I would find really good operators that understand the niche that they're investing in and say, hey, how are you looking at these deals? Put me in touch with your team. And more often than not, they will. Like, I have a team of people that, like, I knew for me, I wanted to make this a really big focus, not to profit only, but to really help Americans. My biggest challenge in America is they're listening to the wrong financial advisors like Susie Orman and Dave Ramsey. I think that both of them are full of shit for the top 0.01% of America. And business owners, I found, also utilize and listen to them. So it's like Apple, the way Apple felt toward MS-DOS, they're like, it's the greatest evil in the world. So I decided to put my own team together to help small business owners understand their finances. So I'm happy to lend that team to you guys too, if you like.
That's great. Yeah, so Leah said one thing, and then we'll move on to the next. And you know, I did a lot of research. My financial firm was underneath an investment banking house back when I was an advisor. And investment bankers, like, although they would know about this stuff, but how are you going to get an investment banker to come in and look at your deal that you're interested in? Very, very unlikely that would happen. I know you could have never walked upstairs and talked to, you know, that investment banking and said, hey, I got a deal. Could you guys help me analyze this? They would probably abruptly show you back the way you came in, back out.
I'm happy to answer that. I'm happy to answer that too. No, it is the right statement. Here's why. Most investment bankers won't look at anything that's sub 10, sub $5 million. And as a result, if they're not looking at it, they don't know anything about it, period. Like, would you go to a veterinarian for a problem with your teeth? Of course not. That's exactly what's happening here. Unless you want to roll up an industry. Okay, so for example, if you want to roll up the dental industry, like my partners and I are doing, and we're going to take it public late next year into early 2025, then and only then you need the services of like a Goldman Sachs or a Merrill or, you know, Bain and Company to take you public. And that's when investment bankers really come in handy, because they can navigate the process. And most private equity companies, that's what they do. They will take a private company public through an aggregation strategy or a roll-up strategy. That's when you need the elite of the elite. That's when you go hire the Harvards. That's why Harvard exists. That's why Wharton exists. But investment bankers looking at your $3 to $1 million deal, they're the wrong people to ask.
Fair enough.
So we talked about revenue, EBITDA, and the multiple. The reason that a valuation for your business is important, generally on an earnings, like when you're valuing a business, you can do it in a multiple of ways. The top two ways are to do a discounted cash flow analysis, also known as a DCF, or to use an earnings multiplier. The earnings multiplier we just talked about, which is EBITDA times the multiplier for the industry. The reason this is important is because it gives you a jumping off point in negotiating with your seller or with the broker. Remember, the broker, if you're working with the broker does not have your best intentions in mind. It is in the broker's best interest to facilitate the sale of this transaction at the highest possible sale price, because the broker, more often than not, is receiving 8 to 12%, so a blended 10% of the sale of the transaction, paid by the seller. Not paid by you, paid by the seller. So the broker is working for the seller. When you create a valuation model and you tell the broker, hey, after digging through the financials and after coming down to this EBITDA number, we don't have the time today to discuss how I adjust for EBITDA, which is the secret sauce for many investment bankers as well. But let's say you come to that $100,000 EBITDA number, and the banker says no, or the broker says no, it's really 200,000 at a 5 multiplier, and you find that it's really $100,000 EBITDA at a 4 multiplier. Understanding the true valuation of that business helps you in negotiating that deal and whether or not you want to take that deal down yourself. That's a really big thing. Very similarly, The reason that you engage an appraiser for a home purchase is so you know you're not getting dicked over. The same reason.
So Mary said, is there a minimum investment amount? Sounds like a good idea to use newer policy money. So the infinite banking concept. But like, what would you say, like for somebody looking at this, what would be like a starting point? Or maybe could multiple people come together and do a deal, as a group?
Yeah, absolutely. When you're looking at a business acquisition now, you generally need a couple $100,000. Let me break down my deal that I'm doing. I'm buying a electrical company for $4 million. The SBA says, okay, you need 15% down. All right, got it. Plus some working capital, et cetera. So now I have to go come up with $550,000 in equity, plus 10% seller financing, and the SBA will cover the rest of the 78.5% LTV, the loan they'll give on the business at $4 million. So I need a couple $100,000. I think the step one is identify the type of investor you are. One thing that I appreciate about Chris and his messaging and using the policy is, one, you have to understand what you're doing with this vehicle. You can't just, it's one thing to have the vehicle. It's another thing to actually understand what you're using the vehicle for. And that's something that he's said over and over and over and over and over. If you don't know what you're doing with the money and the reason that exists and how it plays into your overall strategy, don't do it. All right. So that's just, don't do it. It's more of a pain in the ass to sell a business you've purchased 6 months later because you thought it was just a hobby. This is not a hobby. This is like a real life business with real life employees, with real life families. If you are convinced this is the type of way you want to go and you want to accelerate your wealth here so you can invest in real estate, and that's like the infinity concept I like to talk about, which is accelerating wealth and then taking the K1s and dumping it in real estate and having zero tax liability, right? Like that's how the rich do it. That's how the 0.01% play the game. So understand the type of investor you are. Understand the industry you and your friends or colleagues may have experience in. Then, if you want to go and connect directly with business owners themselves, consider a LinkedIn outreach campaign. Otherwise, get in touch with a business broker. The business broker will help you get pre-qualified with the SBA for a loan. Then, after you have your PFS, your personal financial statement, plus your conditional pre-approval letter from the bank, go to the business broker and say, hey, we're very serious about this particular business. Let's connect with the seller and then engage and do due diligence. So then you submit an LOI. Now you're in formal due diligence, which is 30 to 45 days. And you start rocking through the last 3 years of tax returns, plus financial statements, plus everything else in the deal package you get from the broker. That's the way that I would get started.
This is an obvious question that came in from David. David said, maybe my confusion, but if the company is doing well, why would they sell?
Yeah.
I would almost say, like, my thing would be, if a company is doing well, why wouldn't they want to sell? Sell when you're on the top, not the bottom. It's very difficult to sell a company when you're actually not doing well and you need money. But when you're making a bunch and everything's going good, that's when everybody wants you. And that's when you can get the highest multiple. But I'd love your take on that.
Yeah, it's the exact same reason why you need to get insurance before you need it. And you should also be looking for a job on a W-2 when you have one. It's the exact same scenario. But if the company is doing well, and in today's age where you have a lot of baby boomers that want to retire with no solid succession plan, they do not understand technology. They're looking at their business and wondering, holy shit, am I going to be in this shit for the next 10 years of my life? I'm 70, I'm 80. I don't have that kind of energy. I don't have a succession plan. I don't have kids that want to be in the business. I don't have any young millennials that can even qualify or have the cash because they're riddled with debt living in mommy's basement to buy the business. Yeah, right now is the time to get ahead. And now is the time to sell the business. And frankly, if I know that the average male in the United States lives to 72.1 years old and I'm 65 and a half, I kind of want to enjoy my years before I croak. That's why.
Yeah, it's a really good way to look at it. And, one of the things too that I kind of want to hit, and it plays right into this, is earlier we were talking about YouTubes and you were talking about that F1 channel. Now you mentioned you don't know anything about F1. So, I'm always telling the audience, invest in things you know, like, and understand. But kind of what you said there with the F1 channel, you don't know, like, or understand much about F1 at all. So how would one take those two points and bring them together? Like, invest in things you know, like, and understand to protect your wealth, third law of wealth. Or like what you said, invest in, the F1 channel that I know nothing about, but it makes financial sense. So how do you bridge that gap?
I would say once you get to a point where, have you all read the book Snowball, the one after the one Buffett wrote? It's it was an autobiography. It's insane. It's been a couple of years since I've read it, but in the book, one of my biggest takeaways is you create an ecosystem, and that ecosystem will continue to feed and continue to feed and continue to feed. I'm at a point in my ecosystem where the business acquisition side for me is, it's fun, it's there, it's kind of boring. I know it sounds maybe a little elitist, but it's boring, right? Like, you know, you're good at real estate when the game of real estate is boring. You know, Michael Jordan said it the best, you know, you are really good at the game of basketball when the game of basketball starts to slow down a little bit. So this game of buying small businesses and investing in small businesses and controlling that in blue collar Midwest America for me is boring. It's slowed down enough to the point where I can piece it all together. I love YouTube, and for me, it's exploratory. I like a YouTube channel, let's say, that I can acquire for $50,000 that I know will bring in $35,000 or $40,000 for the year. Am I going to lose a little money here and there on it because I'm trying different things out? Absolutely. And you can learn off of the back of my successes and failures, which is what I encourage you to do. That's the only time where I would say, if you're deploying capital and you're willing to take a little bit more of a risk and you're not so sure of yourself, and you like a little chaos, then maybe take that risk. I'm happier in a state where it's chaos that I can control. This is already controlled on the small business America side. So for me, it's, who am I going to put in? Who am I hiring? What are the KPIs for each role? Where do we expect to be from 4 million to 5 million? How long is that going to take? And what's the valuation of the company? What's the exit strategy? Are we doing a roll up? Are we going public? What are we doing here? And that's gotten fun and easy for me, but also a little boring. So I'm thinking about, well, what else can I do to diversify? And I see the exact same trend on YouTube as I'm seeing in small business, where the dots are not being connected. YouTube creators are losing the game because many of them, not all of them, but many of them are not thinking about YouTube as a business. They're thinking about YouTube as, I just want to get monetized. And YouTube now made it easier to get monetized very recently, which is great. Now everybody has money. And more often than not, you have a lot of these, say, F1 channels with European owners that don't understand business structure. So you use that to your advantage. And that's where I'm building equity in the channel, and I'm building my own confidence in acquiring YouTube channels. And then I'll go back to my safe zone of e-commerce companies and tying the two together. I hope that answered your question.
I mean, it very much does. And it actually just opens my mind and everybody else here too. I mean, if you look at the YouTube, content creators out there, a lot of them are younger, right? And I'm not saying all, but, just the ones I'm looking at. I mean, Graham Stephan and, just some of the other ones we look at. I mean, these individuals got to start. They've been at it, usually the time horizon to kind of get a YouTube channel there. Drew's the utmost expert on here, but usually 5 to 7 years of constantly, doing content. And as you do that, you build up a really nice revenue stream. I mean, a lot of content creators are making millions of dollars creating content for their YouTube channel, but they're not running it like a business. And I, like, being a business guy myself, like, when I look at my YouTube, I'm like, this, yes, it's a revenue, but then it also branches off into this and this and this and this. And I'm like looking at the whole global picture of like the YouTube channel in a way that, like, I guess a business owner would. But I never really thought the fact that maybe a Graham Stephan has figured that out, but there's a lot of guys that have millions of subscribers making millions of dollars, and all they know is the check they get from YouTube. And maybe they've created a training course, a coaching course that they sell, on their thing, or maybe a couple of people hire them to sponsor. But like, there's a picture that's so much bigger that maybe their mind just can't see it.
Yes.
Tony Robbins talks about that all the time. He talks about, a lot of times he'll set out to do something, and he's really into giving. So he'll raise money to feed, children, and he'll set a goal of, I want to feed 1 million children, in a week or something. But then all of a sudden he does it and he feeds 10 million. He's like, I was thinking small, so like a lot of times I think just inherently as humans, we think too small. And I think a lot of these YouTube channels, these guys and gals, they probably are thinking way too small. But you get somebody in there, like Abby, who can see it and say, I see the global picture of what this could be, and I'll pay you X amount. You can still stay in the business, give them some equity or make a deal with them. They get a big chunk of money, which is really what they're after, right? They get more money than they ever dreamed of having. They get a check for that, but then all of a sudden, all the revenue is going to this business, and then the business is created around the platform. I mean, think about that, folks, just for a second.
Yes. So like one of the other channels or one of the other topics categories on YouTube that's really, really fire right now is anime. I know nothing about anime. Like I remember growing up watching, Dragon Ball Z, right? Like I used to watch this. I'm like, oh, cool. And Pokemon. And I used to like Pikachu because he just was like, Pikachu. That literally is all that I know about anime. And I'm like, all right, cool. Maybe I should take a look at this channel too. I'm very industry agnostic. Okay, like this goes against a lot of people, or what a lot of people will say. They're like, well, you have to only be in a particular industry. I don't care because I understand the levers. Y'all now understand the levers. What's crazy is when you start looking at operating the levers for operating profits, essentially cash flow, that then we start digging in a little deeper and you can really become industry agnostic. Anime channels, for example, are insane. There's an anime channel right now. The gentleman wants to sell. He has over 1 million subscribers. Okay, he has over 1 million subscribers. He crushes it, makes $300,000 a year, and he wants to sell it for $2 million. I'm like, bro, where did you get the valuation? Right, that's the question. How are you valuing your business? Show me the financials. I want to see your tax returns. And he's like, tax returns? What are you talking about? I'm like, okay, well, how are you not paying your taxes? And he's like, I hold it all in crypto. I'm like, do you not just see what happened, right? Like with Coinbase and who is it? Binance, like somebody was sued by the SEC because they're like, well, you can't just not play by the rules and not declare income. And that's what he thought he could do. So anyway, I talked him down to a $250,000 purchase price, $50,000 down. And I'm seller financing all of it from the cash flow of the business. So this is like your Roland Frazier idea where you can, or maybe even a Carl Allen idea where you can creatively buy a business because you can do so with seller financing. Because frankly, the sellers of the businesses don't necessarily want a major tax burden up front. They don't mind it though over 5 or 6 years at 6% interest, which is better than what a bank at SBA at 10.5 with 2.5 being variable every quarter will give you. So nonetheless, these are just ideas that you can use when you are having conversations with small business owners and then of course, YouTube channels.
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
There is one thing, Chris, that I prepared that I'd like to go over, and we can just jump in. It's a quick little slide.
Once we're done with this segment, I've got something that I prepared for last night's training that we didn't get into that'll really be applicable for most of you. It's a retirement strategy that is using something that you all have heard us talk about, the policies and the infinite banking concept, but spinning it to a retirement strategy. So stick around to the end and I'll walk you through what that could look like, but not just for you, what it could look like for your kids.
Oh, that's incredible. Here we go. So we talked about revenue. We talked about revenue, multiple, and EBITDA. What I want to talk about real fast is operating profit, also known as cash flow, because cash flow at the end of the day is what matters, right? It's what creates this flywheel for me. I've done a really good job over the last many years of creating a flywheel of cash flow that just turns into more opportunities. So I can take larger risks on YouTube. And the way that I'm de-risking on YouTube is I'm finding people that are smarter than me, somewhat. Most of the time, they're also better looking. And they are legit like running these channels and telling me where I'm screwing up and saying, well, we need this team member and that team member. This is the most important slide. So people will talk about revenue, EBITDA, and the multiple. What people don't understand though, is cash flow has its own levers. Okay, cash flow has its own levers. This is the shit nobody talks about, right? Like this is where the rubber really meets the road. When you're looking at cash flow, There are three levers. First, revenue growth. Two, operating margin. And three, asset productivity. The revenue growth is easy. That's very self-explanatory. You can either grow current revenue streams or go create new ones. And by creating new revenue streams, let's not be shy here. This also means acquiring other companies or businesses to fold into your current ecosystem, which is exactly what I'm doing on the F1 side. I'm just saying, okay, these are the 5 F1 channels. I'm just going to go buy part of you by giving you my team, right? So that's almost like a consulting for equity, my team for equity in your channels. This is the exact same thing you can do in your own business. Operating margin. Operating margin is categorized in 2 different buckets: cost of goods sold and selling, general, and administrative costs. That's what SG&A stands for. Ultimately, these are line items that you'll look for on a profit and loss statement that's spit out from QuickBooks. More often than not, YouTube creators will not have this. And then your asset productivity. If you're buying a business that has machinery, what's your accounts payable, accounts receivable as a result of the doing of business for that machinery? And how utilize, what is the asset utilization ratio for the machinery? Example, if you own $1 million piece of, if you own $1 million tractor or maybe a $100,000 tractor, is the tractor sitting there rusting, or is it being used regularly? And if it's being used regularly, that has a direct impact on accounts receivable and of course, accounts payable. These are the 3 buckets that comprise cash flow. So screenshot this, or you'll have a recording. If you have any questions, I'm open to conversation. I know these are very deep topics, and we've covered a lot of ground, from traditional business to YouTube to why I think investment bankers suck, Leah. And I will not forget that. I hope I see you in August. We could debate that a little more. To also the 3 levers that I think contribute to massive cash flow. So it's a lot to take in, and I get it, and happy to answer additional questions. But that's where we are on this operating cash flow lever.
We did this because this is fascinating stuff. Did everybody learn something today? Did you take maybe one piece of info? But I think more importantly than anyone sitting there saying, okay, yes, I'm ready to just go out and start valuating companies. Like I realize we're not there yet. But the idea of this is to open your horizons and to get you to start thinking bigger, to get you to start thinking differently, like think YouTube like that. How simple of a concept is that to then just identify YouTube channels that you watch every single day, but look at it differently than just watching and consuming content. Look at it and say, I wonder if this person would be willing to sell it, and I could then surround it with these businesses. Because obviously, if you're watching YouTube content, it's for your own use, right? So it's something you know, like, and understand. And it might even be something that benefits your business because it's content that helps grow your business. But then how could that YouTube channel help prepare or accelerate your current business if you owned it? Like, these are the ways I'm looking at it. And, Tess, I'm watching her stuff in here. Tess comes from the insurance industry. Obviously, we're in the insurance industry with the infinite banking concepts. So one of the things I often think about is being that we're so specialized. We're like the heart surgeon that you seek out because you want the best heart surgeon. But that's all we do is a specific type of heart surgery called the infinite banking concepts. But what if we could go out and look at really small insurance agencies that are selling life insurance, and maybe they've got a group of people that are buying one type of insurance, or maybe they're just a general agency. What if we could come in and buy their agency, and then what we do is we absorb it, or maybe work out some kind of a deal where all we do is we just come in and we process only what we're good at, what we're the heart surgeon is, and we work a deal where we get revenue, but it's all their clients. So they send us all their clients because they're like, oh my God, our clients need this. They're making money, but they do no work because we built the processes, procedures, and infrastructure. And then we kind of blend that. So now all of a sudden, we literally just took our business from here to up here. And when he showed you that model, I'll tell you one thing about life insurance is when you look at the cash flow modeling on any life insurance company or any insurance business, oh yeah, that's what they are, because of the residual stream. But the problem with that business is it's very difficult to get a life insurance business off the ground. It's for most people, They would say it's not even worth it. The juice is not worth the squeeze. But if you looked at it from a different standpoint, like I just explained, Now, all of a sudden, it starts looking like it's a piece of cake to do. You just go in, you find an insurance company or, an advisory company that isn't doing what we're doing, and we just make a proposition. Maybe we do an equity exchange. We say, hey, you give us X amount of equity in your company, plus we'll do all this business and we'll give you this rev split. Now, all of a sudden, you just benefited because now you're getting an equity piece of that company, which you'll never do any business in there. It's not something you want, but you don't have to, because you had something they needed. And something they might not even know they need it, but you make the point. It's no different than these YouTube channels that we're talking about. Like you propose an idea that they've never even thought of. They've never even thought of anything other than like, well, YouTube pays me a check, and oh yeah, this guy with this ice cream company wanted me to do a promotion for him, so I did that, and they paid me $5,000. Like that's how they think. But like then you come in and you say, hey, I got this entire idea, this global business idea. How about I buy your company? I pay you X amount of dollars. And not only that, and then I know a lot of you are like, yeah, but I don't have the money to buy a company. Maybe you don't need it. Maybe you raise the money. Maybe you go out and you find a whole bunch of people. There was 120 some people on here today. You find 50 people on here that love this idea. You guys come together and you do it together. You see what I'm saying? Like, stop thinking so small and start thinking bigger. And then you say, okay, well, yeah, but I don't know how to. Find people that know how to. Abby knows how to. Find other people like him. Leah knows how to do this. And then put them on the team. Make it worth their while. And then all of a sudden, now you can pretty much accomplish anything. How do you think all these guys do it? Like a lot of people look at BlackRock and Blackstone, and they're these world leaders. But where did they start? This tiny little investment firm. They all start the same place, folks, but they had a bigger vision than the other people. And then they went out and they got strategic, doing exactly what we just talked about.
I love that. Leah, we're going to be fast friends. She's like, I'm just an evil Gordon Gekko investment banker. You know what? I think what we're going to do is go create Blue Star Airlines Capital or Blue Star Capital, and just go have some fun. I think we should absolutely do that. I hate you so much.
I love investment banking, and I've read the books about Lazard phrase and everything else.
Yeah,
it's a
man.
Fascinating business, but one that I just never could really plunge myself into, because you literally have to plunge yourself into it, and it wasn't a side project.
Agreed. So to your point, there are two examples, and then happy to take some questions. The first example is we think about insurance, and I think you mentioned Tess is in the insurance world. You know what's blowing up right now? Women's health, like faceless YouTube channels. Okay, faceless YouTube channel means there's no face behind the personality. It would be like Chris voiceover without his face, but a lot of really amazing content. So what if you went out and purchased a women's health YouTube channel that was doing really well, tied it to Instagram, and made it super hyper image focused, added TikTok, and now all of a sudden you have an email database with a newsletter that you can constantly get business from. That's mad. That's like magic. This is the exact reason also why I'm in the process of actively scouting for an accounting firm. Why? I'm looking for an accounting firm that does 1120S tax returns specifically, and also a couple of other different types of tax returns. The reason for that, one, I get the cash flow of the accounting firm. Number two, I can just go buy, or I can just have them do my taxes for free, which is great. And more importantly, all of the accounting firm's clients could become acquisition targets for me. Insane, right?
Yeah, it's in the world, it'd be the macro view, but versus the micro view, but like just the big thinker. You're just looking at it as a bigger thought process and a bigger business opportunity. I mean, that exists in every line of business. I mean, even what was it? Equestrian pole dancing. I'm sure there's some kind of I'm not going to touch that one with a 10-foot pole, but I'm just saying, like, it was a joke, and I Googled it, and it was actually a freaking thing. It was a thing. Crazy.
Yeah, it's nuts. I think Jennifer had a question. So if I want to buy a plumbing business in Ohio, and I've never run a business, how do I manage it once I've purchased it? First of all, move out of the state of Ohio. Okay, coming from the state of Michigan, I just can't deal with anything Ohio. But if you were to purchase, I mean, Michigan football hates Ohio football, obviously, right? But I would say if you want to purchase a business and you have no experience running the business, the likelihood that a bank will give you a loan If you're the only person that's part of the business, they're not going to give you a loan because you have no experience. But if you partnered with, as Chris mentioned, 25 or 30, hey, go blue, or 40 other people from the attendees today, and you're like, hey, 3 of us have experience in plumbing, you win. And then it comes down to operational cadence, KPIs, weekly meetings, what the growth strategy is. And that's where somebody like, I'm happy to help. I'm sure you could find other professionals that can also help there too. Go find a fractional COO, go find a fractional or full-time CEO for the business. I have zero interest in being C-suite. Right? That's why in my world, Harvard, Wharton, Yale, Stanford, these universities exist, because I can go hire from them. I want the best and brightest, right?
Yeah, and a lot of times you can hire from those pools of knowledge for a lot less than you think. A lot of times these individuals graduate from these big schools, maybe not right now, because obviously it's a pretty robust employment market, but that's deteriorating. And eventually, like, the best time to seek that kind of talent is when everything falls apart, right when you should be looking at acquiring businesses, pennies on the dollar, because hey, when's the opportunity? When everybody else is running away from it. So like, a lot of people are like, oh, I could never afford those, and Gentry, you're talking about the plumbing business. If you're a plumber and you understand plumbing, you may not need to have to understand how to run the business. Hire a CFO. Like, when I started Private Money Club, I never intended or wanted to run Private Money Club. I didn't want to run the business. I'm already running enough businesses. I just don't have the time. So right from day one, before the company was ever even launched, I said, I'm going to hire someone to run this, a COO. I'm going to hire that person literally so that I don't have to run the company. Gentry, that's how you got to think. Like, you don't need to understand the business or do that. You need to understand what the business does, more specifically, what problem the business solves. And if you're a plumber and you understand the problem you solve day in and day out, then running the business, to be quite frank, might not be your skill set. Hire somebody that's what they're good at, that they don't know how to turn wrenches, that they don't know how to be a plumber. You're the expert in being a plumber, which is why you want to buy a plumbing business. Find somebody that's an expert that you could hire, and that probably isn't a lot. Maybe it costs you 120 or 150 grand, and I'm just shooting numbers out there, to hire like someone that's really talented at running a business like that, a construction business. They'd be thrilled to come in and do that. And then you make it performance-based, their contract, instead of just saying, hey, I'm going to pay you 150 grand to show up 9 to 5. Don't ever do that. Make it performance-based. Say, hey, you can make up to 200,000, but here's the levels we got to hit for this business to do that. Then all of a sudden, that person's going to go out and build your business for you. And all you're going to do is just work with the plumbers, because you're a plumber and you know, like, and understand that aspect of the business. You see, that's how it works.
We're hitting so many things. Oh my God, I love this conversation. Like, that's exactly right. This is why when you own a private company, you can do so many cool things. Talent acquisition in today's world is so important. So what do? If you own 100% of a company, open up 10%, go hire a COO, pay that COO, him or her, $100,000, $200,000 a year. That's what we did for one of my companies. And we gave him, in this case, we gave him 5% ownership, vested over a 3-year period on anything above a specific valuation. Done. Like, and he's built companies before, and the last company he sold for $85 million. Now I have his mind fully committed on this company that's crushing it. It's absolutely the right way to think. And plumbing, for example, kind of staying on the blue collar world, AI today we're seeing something in America that we've never seen. Artificial intelligence, the rise of artificial intelligence, removing in mass white collar jobs and tech jobs. So what does that mean? Where's the opportunity now? The opportunity is in human to human, handshake to handshake, blue collar, using your hands business. Those industries, also known as professional services, also known as healthcare, optometry. Optometry, the margins on optometry are so, oh my God, they're so fat, okay? Like, and I mean like fat, like pretty hot and tempting fat. It's like, fat. All right, fair. 30% plus margins in optometry, dentistry rolling up there. I mean, AIs will never replace these industries. Plumbing, HVAC, roofing, never. They're not going anywhere. Massive opportunity today. And then of course there's YouTube, and you can weaponize your traditional business model with YouTube, which I think is kind of cool.
And we'll kind of wrap this segment of the webinar before we go into this retirement concept with this. Right now, folks, all of you are on the brink of one of the biggest opportunities, not because the markets are going to fall apart, but because nobody wants to put the hard work in that's necessary. There's so few people out there that can be the visionary, that can be the person that can envision all the things you heard us talking about. That's a rare breed of a person. There's a lot more people that just want to go to work. They want to work 9 to 5. They want to leave at 4:55 every day. Why? Well, just because that's the mentality. And those are the ones that you can hire to help run a business. Give them what they want, find their strength. Maybe they can do it 9 to 5. They got the skill set that you need, and they're looking for the opportunity you can provide, because people aren't motivated just by a paycheck. People are motivated by being part of something bigger than what they can dream up and being able to tap into that and help grow that. And I'm just saying, there's two people. There's the visionaries. Many of you are that, the entrepreneurs. And then there's the people that just want to work. Like, and listen, like, I'm not going to call any names, but like my wife's aunt works for us, right? She helps us out around the house. She's that person. If we ask her to come in at 8:30, she's like, well, I guess I can, but why? Don't ask why, just because I need you here at 8:30. But like, I'm just trying to explain, like, there's those people, and there's a lot more of them than there is you folks that are the entrepreneurs, the ones willing to put your time, your energy, your effort, and everything else out there to learn something new, to go the places those folks are not willing to go. But they probably have the skill sets you don't, you need. It's just a marriage of the two different things coming together. Like, start thinking that way, because I know a lot of people have all these ideas and you're like, oh, I just don't know how to do it. Find somebody that does. Stop thinking that you have to know how to do everything. That's the worst thing an entrepreneur can do, is start a business and then work in the business day in and day out. You know what you just created? A JOB, just over broke, because you're stuck in the business because you thought you were the only one that could run your business. Matter of fact, fire yourself, because there's somebody that's way better suited to run your business when you should be working on the business and working on the marketing and all the things that make the business grow, instead of being stuck working in it. I mean, it's sad for me to go into businesses when I see the entrepreneur, the visionary sitting behind the desk, sitting behind the stove cooking. Now, maybe that's what they love to do, but a lot of times they're just stuck there because they put themselves in that position and they never found a way to fire themselves. That's a sad fact of reality. Don't be that person.
Couldn't have said any better. I freaking love that. I was one of my companies I was in for, we started in 2017, and we've had it now for 6-7 years. And I was co-founder. I'm still a co-founder. And I was in the role of a COO, and then I took the role of a chief product officer. And I realized I was 5 years into this business too long. I'm not the right guy to run it. And it took me that long because I identified myself with this business. And my ego then was attached to this business. I was thinking about it less from a business owner's perspective because I was working in the business and not on it. And if I took the time to step out of that moment, and to step out of that perspective, I would have realized, whoa, I need to go hire somebody else that's better than me. And the moment that we made that decision, so much better. So much better. We saw so much more growth, and it's been phenomenal since then. So I know my lane, right? Like, I'm a 0 to 1 guy. I can piece all these things together. I'll find the opportunity, the capital, the resources, and the people. But after that, I will build it for a year and then pass it off to somebody else that actually knows how to take it to the next level. And by the way, that business we built a platform in the nurse practitioner industry where we could help them find their clinical rotations so they could graduate. I have no healthcare background. I'm an electrical engineer from Michigan. I threw stuff up into space on like on a 10 to the negative 9th nano level on like some circuit board. But I disrupted the space. But I'm not the person to run it.
Just like I said with Private Money Club, like I can run it, but I don't want to. So I'll find somebody to run it. But like, let's move to the other side. Like, everybody on here should know, or you just talk to one person, like, I can barely turn a computer on. Like, I hate technology. Technology and me fight every single day. And everybody that knows me well knows that to be true. So then some people would say, well, then what business do you have creating a technology company? all the business in the world because I fight with technology. So I want to create a technology that works for the people like me that suck at it. But I don't know how to code. I don't know how to develop. I don't even know how to envision that. So you know what I did? I found people that did know how to do that. You know, Aknot, who's on here, like we're signing a deal with him to basically develop my vision. All I need to do is have the vision of creating this thing. I have no idea how to make that happen. None, not a single freaking clue of how to make my vision become reality with code. But he sure does, and his whole team does. And all I had to do is marry his knowledge with the vision and make him a piece of it. And all of a sudden magic will happen. You'll all be able to sit in the front row, get the popcorn and the little 3D glasses and watch what we create. You think Private Money Club, what we've created today, is what our vision is? Stephen and I will sit down with you and tell you, actually, it is the farthest thing from the vision that we initially had. Stephen and Shauna and Gabby and Andrew and Aknot, we know the vision. Now it's just a matter of just getting the right people there, which we now have, to make the vision a reality. You all have a vision. You all have something you want to create. So just stop thinking you have to create it. That's the biggest problem, because it'll probably never happen, because you'll either never make the leap or you'll just allow that misbelief to stop you from ever doing it. Just find somebody that knows how to share the vision and then make them a piece of it. So many people are like, oh, they don't want to give anything up. If you don't give something, you'll never get anything. It's the universal law. Help enough people get what they want and you get what you want. You've heard it. So do it. Stop thinking and saying it. Do it. Create your own destiny. Stephen, like we had me, Stephen, Gabby, my whole executive team, we had a very interesting conversation in the last week. I'm not going to tell you about it, but every one of those individuals sees the vision, and all they want is to be part of growing it. Because we all understand when that day comes in the future, like what that means. But so many people are so focused on what they get today that they can't get what they could have tomorrow, which is a life that a fraction of a fraction of a fraction of the people in this world will ever be able to see, feel, and understand. And it's all because they all wanted what they all wanted something today. Sometimes you got to give up today to get tomorrow. And I'm going to wrap that session up with that. Avi, this is awesome, man. I think we really covered a lot more than we will, and I can't wait to see you out in Raleigh. I think it's going to be amazing, and I hope all these folks on here join us out in Raleigh, North Carolina for the Money Tank event. We'll put the link up again, folks, so you can get your ticket half off today only. And I'll sweeten the deal, folks. I do this every once in a while. Like I don't care whether you're a skateboarder or you got a kid that's a skateboarder. These are limited edition skate decks that we made. They're numbered. This is 62 of 100. This is 64 of 100. Everyone's different. They're hand dipped and hand painted. The first 5 people that buy a ticket today at half off to come see me, Abby, Stephen, Shauna, all of us in Raleigh, North Carolina, I will personally sign one of these and mail it to your front door. Or maybe you want it to the side door. It's up to you, wherever your Amazon person delivers or your UPS person delivers. Your first 5 people, that's it. I'm only doing 5 of them. So when we're at 5, sorry about your luck, but hey, it doesn't matter whether you get the deck as long as you're out there, because that's where the knowledge is. And that's where all the people that I'm talking about that will help you make your dream reality. The people with the money will be there. The people with the vision will be there. The people with the deals will be there. The only person that won't be is the person that starts questioning why they wouldn't buy a ticket to go to Raleigh, North Carolina. Abby, thanks so much, man.
Hey, you're welcome. Looking forward to seeing you August.
All right, folks. So as we wrap this segment, I got a little special thing here, and I'm just going to make me big on the screen because I want you guys to be able to see what I've created. So first and foremost, I created something that I knew about when I was a financial advisor, something we sold all the time, something we talked about all the time, but something that I've done a very terrible job of teaching and showing this audience, because I just don't believe in retirement in the general sense of what they've taught us that retirement is. Retirement, as most of you would articulate it, is it's the day where you stop working, you sail off into the sunset or do something. It's literally the day where you just stop working. To me, I've seen this firsthand. That's the day you die, because you lose purpose, you lose passion, and you have nothing. And some are like, well, I'm just going to go golf. Yeah, for the first month, maybe 2 months, maybe 3 months, that's good. But talk to anyone that did that. Golf gets old too. You got to keep reinventing yourself. So retirement to me really is just another way of saying, I want some income flowing in the door that's going to be tax advantaged, and also that I can then use to go do my next passion. Maybe I use it to write a book. Maybe I use it to go out and buy a golf course. So I thought I would just explain to you some different ways that you can use this stupid old vehicle that we always talk about called whole life insurance, but specially designed whole life. It's not the stuff your brother-in-law tried selling you last week to provide you a retirement. Now, let me just give you a summary before I say that. I want to go back to my good old boy, Will Rogers here. The biggest problem in America isn't so much what people don't know. The problem is what people think they know that just ain't so. People think whole life insurance is just money it's just a death benefit when you die. And some people are like, think that it's just overpriced life insurance, Dave Ramsey. And some people think, it's the worst place you can ever put your money. But if the problem is not what you don't know, the problem is what you think you know, then you got it all backwards. So given that statement and putting it into context, let's just go into a plan. I did this on a 45-year-old. Why? Because I'm 45. And I did a pretty small premium. I just thought, all right, people putting money in a 401k to retire, they're probably putting 20 grand away. Okay. And listen, like you're doing one thing that I can't show you here is you're getting a pre-tax deduction on the money you're putting into your 401k. But Uncle Sam knows that. And someday later in this situation here, where do I start taking an income? I start taking an income 20 years from now. Okay. And 20 years from now, Uncle Sam knows that you're going to pay a higher tax rate on all that 401k money. So I just reverse engineered it. I said, I'd rather pay the taxes today and then have everything tax-free in the future. Now, some people think, that's a Roth. Yes, it is. But you see, the problem with the Roth is you don't have the liquidity. So this is a specially designed whole life, and we're going to create what's called a SLIR, a supplemental life insurance retirement plan. And we're going to do it the exact same way you've seen us show you how to get all the money back for every car you're going to buy, drive, and own, how to pay off your debts. We showed you how to use private money club and how to use your policies to lend on deals in private money club. So why not just show you what the retirement piece looks like? Now, I'm going to show it to you two different ways. First, I'm going to show it to you with all we ever do is put 20 grand away per year. We never use the money, which I'd smack you if that's what you did, because we don't let money just sit. But that's how I got to show it. We're just going to leave the money sit there. And then someday in the future, 20 years in this, we're going to just start taking in income. Fair enough. But then I'm going to kind of modify it. And then I'm just going to ask you all some questions on, hey, if you had 20 grand, what could you do? Some of you would say, I'd pay off my Visa. I'd pay off my car. I'd lend it on private money club. You'd find something, right? And then I want you to start really allowing what that prior conversation with Abby was about dreaming. Then I want you to start thinking about what could your retirement really look like if all you did is made your money work for you in the effort of someday actually having a tax-free retirement income that will fund your future passion that you want to do. But here, let's just hit the basics. 20 grand a year. And then in year 11 to 15, I do $6,000 a year. Total amount I put in is $254,000 over 20 years. Okay. How much cash value do I have? $362,986. Now, most people, if you've ever looked at money or retirement or the stock market, you'd be like, that's awful. I put in 254 for 20 years and I only have 362. Correct. This is, remember, like I said, this is not how you would use it. You would never just put the money in and just leave it sit there, but I got to start somewhere. So in this case, what I want to then do is I reverse engineered this. So follow with me because the numbers aren't going to make sense at first. I showed cash value increase. So as you can see, in the 5th year, I put 20 in, I can take 21 out. 10th year, I put 20 in, I take 26,000 out. And then the numbers go negative. Why? Because I'm going to start taking an income. $22,582 every single year until the 40th year, which makes me, how old does that make me at that time? Old enough. Let's see. I start taking income when I'm 65 in this particular example, and I take it out until I'm 85 years old. I kill myself off at 85. The stress will probably get me before then, but hey, I am running and swimming, so maybe I'll make it longer. $22,582 tax-free coming out. I take $474,222 out tax-free. The total amount that it cost me wasn't $254. It was $222.30. I've had a death benefit my whole life, anywhere between $359,000. It peaks at a high of $538. And then as I start drawing it down, I draw it down to, when I'm 85, to $179,000. Because remember, I'm taking the money out of the policy. So some of you look at that and you're like, wow, that's really good. I look at that and say, that sucks. How many of you actually for a second were like, well, that's not bad. I put 220 in and I take 474,000 out tax-free. How many of you actually liked that? I kind of already ruined that thing because I said it sucks. Did anyone like it? You can lie. Anyone? Horrible. Anyone else think it was horrible? Anyone else? It's all right. Peter said it's all right. Not sure. All fair answers. In retrospect, this is really bad because this is never how you would do it. And I think all of you know where I'm going with this. You see, you would never, ever just leave the money sit. What we would actually do here, and I'm just going to change the color, is every single time we had money in here, what would we do? Well, I'd find one of you on here that needs 20 grand. So, well, in this case, it's 17,000 the first year. So does anyone on here need 17,000 for anything? Anything at all? Anyone want to borrow 17,000? Can I get a volunteer? Does anyone need 17 grand? Just think for anything. I don't care what it is. Pay your credit cards off. Okay. All right. Matt, what do you need? What are you willing to pay me for the 17 grand? Look at, see, all those people said, I'll take it. What interest rate you guys willing to pay me? Ooh, Jason said 20%. Damn. Jason's obviously got somewhere to make more than that. Todd said 10. Let's just hear anyone else. Fed rate. You guys can screw me and like offer me a low rate. It's okay. Fed rate would be a low rate, 8%. Okay, so Matt said he's got a credit card he's paying 27% on. So Matt, I'm just going to stick with you since we started this. If you're paying 27% on a credit card, would you pay me 10% for my 17 grand? I mean, you'd have to be silly not to, right? You make 17% spread. Like, why the hell wouldn't you? So let's just say that, I'm going to give 17,000 bucks to Matt, and Matt's only going to pay me 10%. I'd probably charge more, but hey, it's okay because it's a low dollar amount. I can't find a place for 17 grand. But you see how fast they just did that? 30 seconds flat. I literally found, and legitimately, Matt would probably do this. Matt would probably borrow 17,000 at 10% from me if I was being real. So now this 17 grand is out making 10%. But hold on, we're not done because I'm still making interest and dividends on 17,000. You know how this stuff works. So let's keep going. Let's go to year 5. Year 5. 20 grand, I had 98. So now let's just do some math. We got to take, and I got to make this up. Okay. We got to just kind of make this up. So 98,000, and I would do this every year, but I'm only doing it in 5-year increments. So 98,000 minus the 17 I gave Matt. So hypothetically, I got about 80 grand left. So here, let's just write 80 is what I've got net, give or take, probably a little bit more. Who on here needs $80,000 at 12%? Anyone? Do I have any takers for 80,000 bucks? At 20%, or sorry, 12%. First one gets it. 80 grand. There we go. Mary wants it. Okay, so Mary gets 80,000 bucks, and I'm making 12%. Let's keep going. 10th year, I got 221,784. So 221. We'll just take off the numbers. Minus, I already moved 80 of it to Mary, and I already moved 17 of it to Matt. I got 124,000 left. Anyone need 124? Do I got any takers at 15% on 124,000? 1,524. I know you are all looking at this thinking I'm just like making all this stuff up, but Jeff needs that. So Jeff needs 124. Okay, so we got Jeff at 124, and he's paying me 15%. I know all of you like are kind of looking at this being like I'm just making it up, which I am, but I'm really not. I'll bet you any money Matt would take the 17,000 tomorrow. I'll bet you any money Jeff would take the 80 grand. And I'll bet you, or sorry, Mary would take the 80 grand. I bet you any money Jeff would take the 124. This seems like it's fictitious, but I guarantee you it's real. So now I made 12, 10, and 15%. But you see, earlier, remember I told you the income was just 22,000 if I never moved the money. But what if every year or every other year, in this case, every 5 years, I just moved whatever cash value I had? These are the interest rates I'm getting. What does my retirement look like now? Well, I don't know. We had 22 grand, but now let's just do the math. Okay. I didn't even go all the way down. I'm just trying to get you guys to think bigger.
15 plus.
Well, just do 27
plus 10
divided by 3. Everybody's got it. 12%.
There we go.
12. So 12.33%. Thanks, Todd and Craig and Daniel. They beat you.
I was trying to pull it out.
So if I just take the dollar amount that I lent, 124, okay, plus 80, plus 17, and it would be more than that because remember, I only went a couple of years here and I still could have gone further. That's 221,000 I've got lent out at an average of 12.33%. That's $27,249. Now, all of you know that all the cash value is still earning interest and dividends. So realistically, this is still happening whether or not I lent all this money out every 5 years. It doesn't matter. This is still reality. The only thing I'd have to do here is pay the interest on the loan. So let's just say the interest on the loan is 5%. So let's just subtract this down. So here, I got to write some numbers here. So we had $27,249, which was the 12.33, but we're not going to be able to do that because we're going to lose 5% to the insurance company, give or take. Just trying to be real. So 7.33. How many of you in your 401k have averaged 7.33% every year without any fluctuation? Did anyone do that? 7.33. Did anyone get 7.33% in their 401k every single year without ever missing a year? Nope. Most people, yeah. Ignat said, I'm so good at losing money in the stock market. So obviously he's not doing that. So 7.33 by any financial advisor standard would be a massive success. Like you'd probably get one of those awards that goes on your wall, right, Stephen? If we could earn our clients 7.33 as advisors, we probably have some awards for that. 124 plus 80 plus 17 is the amount that I lent out times 7%. We'll just do 7%. So instead of 27, my net after paying the insurance company, those jerks, their 5% is 15,470. But plus, I get to make 22,582. So now my income, and all I did, and I didn't even do it all years, is $38,052 a year tax-free. And I missed all this, okay? Because I only went to, I think, whatever year I went to. I only went to 10 years. I missed, I don't know, quite a bit of money there. Are you seeing what I'm doing here? Everybody following how I just did that? Like, this isn't complicated. I literally took a completely cold audience of a little over 100 people and asked who needed money, and they all needed money. And I just so happened to have this money in this vehicle that I'm going to call the supplemental life insurance retirement plan that I created. And all I did is I just moved money because I can anytime I want because it's liquid, but I still make interest and dividends on all of the money because remember, I'm not using my money to lend out. I'm using the insurance company. They're just taking it for my death benefit. But yet my end goal, the reason I set this thing up was just to retire. Pretty cool. And I didn't even go all the way just because I'm trying to be conservative on time. Now, let me now really show you what I wanted to show you, because now I want to wow you. I want you to remove yourself from this equation. And I want you to stop trying to solve your problems for just a second. And I want you to think of the most important person in most of your lives. This won't apply to all of you. Stephen, who's the most important person in your life?
You, Chris, you.
That is a lie. How about Bryce?
How about my wife? Yeah, my son.
Yeah, your son, right? How many of you would agree that your children or your child is the single most important thing in your life, in your world? Absolutely. So why don't we do this for our children? Why focus on ourselves when we can set our kids up? Now, let me show you how this works. How old is Bryce?
7.
7. So close enough. I got a 5-year-old. Okay. I got a 5-year-old. A 7-year-old, it wouldn't change much. So I'm going to set one of these slurp plans up for my 5-year-old. Okay. And I just picked an age out of the sky. And I'm only going to put $8,000 a year into the plan for 10 years. And then from age 11 to age 50, my child's age 50, I'm going to put 2,400. Matter of fact, I'm probably going to make my 5-year-old, or in 10 years from now, 15-year-old, try to make this deposit themselves. I'm going to teach them how to do that. Let's just go through the math. And I just summarize this because now you see what I'm doing here. But what we're not going to do is we're not going to do what we did in that last exercise where we're actually going to make the money go to work. We're just going to put the money in this stupid, specially designed whole life, and we're just going to leave it sit there until retirement. But you see, we're going to retire our child early. Why should your child wait? We have to wait till 65. Why? Because of Social Security? Because somebody told us that's the retirement age, 62 or 65? F them. My kid can retire when my kid wants to retire, right? Don't you want control? So create the control right now. So I'm going to put that premium in. So by the time I'm done putting money into this plan, at 50 years old, I put in 161.6. Now, some of that was me, the parent, putting money in. Some of that was the child just continuing on this $2,400 a year. $200 a month. Okay, that's all they're doing. At age 50, the child starts taking an income. Okay, and that income, just so you guys know, and again, remember the number would be a lot higher if you just made the money go to work, but it's $26,000. Now I know some of you are like, that's not a lot of money, but let's just look at the cumulative amount. That income starting at age 50, going to age 85 is $958,968. You put 161 in, but you take an income of 958. Now, how many of you think that's a pretty impressive number? I remember before on mine, I said that sucked, but now that gets everybody's attention. But you see, but wait, there's more. You see, the cash value at age 50 is $624,000, 374. But at age 85, after we took $958,000 out, there is still $617,362 in there. But wait a second, Chris, you just took an income of $958,000 during that time frame, and the cash value barely went down. Welcome to the power of uninterrupted compound interest. But we're not even using the uninterrupted part. We're just using the stupid whole life policy. That's it. 600. So could this child have taken more income? Absolutely. We barely took just the interest out of the account to provide $958,000 in income payments, tax-free, for the child from age 50, because why should they wait till 65 to start taking an income, till age 85? But wait, there's more. The death benefit at the age of 50 is $1.58 million. And the death benefit at age 85, after they took $958,000 out, is $1,099,000. So not only did we provide an income for our child long after we're gone, not only did we barely touch the principal, we just skimmed some of the dividend. We were dividend clipping, as Brent Kessler would call it. We were just clipping dividends. Okay, we were just taking just the interest out, and we provided a legacy for our kids' kids. Now, we would teach them trust and that whole thing, but the whole time, if my kid needed a car, hell yeah, we're taking the money out of here to buy the car, and we're going to do it the same way we taught you. If they want a boat, yep, we got the liquidity. We're going to take it out there, and we're going to finance a boat. Whatever the kid wants during their life, we have liquidity of this money, unlike a 401k, unlike a Roth IRA, and unlike an IRA. Full liquidity, all tax-free, and a legacy to boot. Now, if I can just wrap up and ask this one question, why in the hell have you not done this for your child? I'm being serious. Like, why haven't you done this? Some of you might say, oh, why I couldn't do 8,000. Great, do 3,000. Oh, I can't do that. Great, do 2,000. Does it really matter? The numbers might be a little less, but the math is going to be the same. Why haven't you done this? If somebody showed me this, I don't care how many years ago, 20 years ago, I would be asking myself on the other end of that camera and looking at that screen, shit, I got to do this for my kid. Because like there's just no reason not to. If the reason is a dollar amount, make the dollar amount your dollar amount, not mine. Folks, like, stop thinking and start doing. Maverick said it. Don't think, just do. I'm going to leave this webinar with that. Don't think, just do. Stephen, if you want to put the link up for people to schedule a call, if they want to set their kids up for retirement in a way that we never had the luxury to do for ourselves, schedule a call. Don't think, just do. It's not about you, folks. It's about your kids. Set your kids up in a way that they can only dream of being set it up. Matter of fact, actually, screw that statement. Set your kids up in a way that you could have only dreamed of your parents setting you up. I hope you all enjoyed this. I know we went a little over. Thanks, everybody, for joining us for another week of Wealth Webinar. We'll see you next time. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.